Hey traders, welcome to Charts and Coffee. Great to see everyone. Hope you're having a good Monday morning. Hope it's off to a good start. We have a bumpy one coming up. So if you haven't already looked at the calendar, if you were with us for yesterday's Raghee report, our Sunday evening show to prepare for the week, you saw already going into Monday, we have a number of flash services PMI numbers out of Europe. Now remember, 4:30 is interesting because it's when the Asian markets are closing, 4 a.m. Eastern, and we have the European and UK markets at that point open for 2 and 3 hours already, respectively. At that point, or I should say 1 and 2 hours, respectively. Regardless, they're already underway. We meaning in the US, we're going to inherit some of that risk appetite as we start our session. We have that quirky little flash services PMI at 9:45. That's an unusual time. We're pretty much aligned usually to an 8:30 hot zone and a 10 a.m. So that quirky little 9:45 is going to squeak in there halfway through our opening period, our opening range. So during that clearing, remember 9:45, halfway through, we could see some momentum, some volatility. And then, as if that isn't enough, we've got Treasury Secretary Yellen at 11 a.m. Today, we will definitely have pencils down. And that's my way of saying no new day trades after 10:35 a.m. Eastern. I'll manage what I have, whatever's open, I'll manage what I have, but I will not enter a new day trade after 10:35 Eastern this morning. With that coming up, there's going to be a lot of jockeying around for position, and clearly we're going to be ready for volatility based on whatever is said during that speaking engagement. And by the way, what is Janet Yellen going to be talking about? It is a moderated discussion. All right. Now, questions are usually going to make what could be a lower impact event much higher. But really, in this case, I don't care what she's going to say. I don't care if they're prepared remarks. I don't care if they're questions. Just the fact that it's a Yellen or a Powell is going to make a difference. So with that in mind, gang, that is what we've got coming up today. Shan't be a boring one. All right, let's get into the questions. As always, I can see them coming in. Feel free to type them on in, and we'll get through these questions. This is a great way to prepare for the morning, right? We get to see what each other are looking at, thinking about, factor in, is there anything we've overlooked in our trading plan and our game plan for the day or for the week? So love the community here, our caffeinate and dominate community. Hey there, Alex, how are you? The HPMRs on the 5-minute ES were frequently playing patty cake last week. Oh, I like that. I like that. So what does that mean? So HPMRs, by the way, is hourly price movement range. And those are the zones that are on my chart. This is a process that I created many years ago, many years ago, using historical volatility to project volatility and time-based support and resistance. They're really cool. They just work really well because they measure the market in a way that we usually don't know to measure the market. We know support and resistance, but what about volume? What about volatility? How does that come and go throughout the day? Well, this measures volatility. And when they patty cake, as you said there, Alex, what that means is the volatility is expanded so much. Visually, the HPMRs, as you said right there, I've never seen a don't day trade right now indicator any better than that. I agree with you. It's a warning that whatever's normal, whatever we're usually calibrated to, we're exceeding that. And it's a fantastic way to know we're wandering into a higher risk environment. Even if it's not something that we have on the calendar, this indicator knows what is normal between 9 and 10 and 10 and 11 and 11 and 12, and how far away from that have we deviated. So thanks so much, Alex. Very true. Well said. Patty cake. I'll have to remember that. That's good. All right, Prince, how are you? If trading futures, how do I determine if my stop loss is too tight? Prince, that's a great follow-up question to Alex. That really worked in tandem. Perfect. I use the hourly price movement ranges for intraday. So if I'm trading futures end of day, it depends on whether it's a trend following entry or whether it's a fade of a floor or a ceiling, meaning I'm going to buy a floor or short a ceiling. Depends on which one, because on one hand, too tight and I love that you said too tight. That's awesome. Because what that reminds us is that there is a nature to every market, whether you're looking at it over the scope of 5 minutes, intraday, or a daily time frame, and you're looking at the course of a trade that could last for days, if not weeks. We have to calibrate our stop losses not only to what's allowable risk to our account, we also have to calibrate to what the trade demands. And sometimes when those two things diverge, we have to also have the discipline to say that we either have to reduce position size, use options, use micros, use a different kind of tool to enter the market because the risk in the way that we're presently thinking about it might be too great. So for a lot of traders, what does that look like? That would look like micros instead of minis. That might look like options on the futures contract instead of the actual futures contract. So those are the adjustments that I'll make, and they're based on the time frame and the setup, right? So room to breathe, exactly. That's a volatility conversation. And risk management is never, ever separate from what is the nature of the market, right? We do that most visibly. It's easy to see with the HPMRs intraday. We do have that same type of data for the daily time frame as well. And I will put that into consideration when I'm looking for not only exits, meaning stop losses, but also exits, meaning targets, and also entries, right? Volatility is never far from that. And by the way, gang, while I'm thinking about it, when we're talking about volume and volatility, tomorrow, it is coming up. Tomorrow, 8 p.m. Eastern, 7 Central. I don't know what time it is in Jamaica, but it would be great to be there too. Tomorrow, we're going to be doing a webinar on volume, how I've been trading this year, how this year and the way that I've been trading, whether you saw the way we set up July and the rally we had there, whether you saw the way I've spoken about 2008 and how I've rebuilt a portfolio, or whether it's even 2019 and 2020. 2019, by the way, was when we had a fairly swift, not like this, but we had a swift tightening cycle. It's 2018 to 2019 bears some resemblance to what we're seeing here too. So how did I decode those environments? And importantly, it wasn't by trying to be there first. It wasn't by trying to, put on some hero trade. It's by making sure I put myself in a position where I knew that wave was going to more likely carry me into shore. Yes, surfing analogy than not. So we're going to be talking about volume, decoding volume on Tuesday. I cannot wait for this one. Volume is something that I'm super passionate about. And in a really, really tough time in my trading career, which I know for a lot of you in 2008, that was really tough. How did I find some confidence amidst probably one of the toughest times for me as a trader, where I was just feeling very helpless and I didn't have any guidance on the chart. For the first time, maybe in my career in 2008, I would look at the chart and I wouldn't see anything. And I don't know how many of you are feeling that way now, but there is a way to decode that. And that's what I did in 2008. And it's just been rinse and repeat ever since. So that's coming up on Tuesday. Super, super excited. Fallen Prince, a lot of what we're talking about with your question would go back to a combination of, okay, what's the volatility and are we seeing volume correspond with that? So thanks for the question. I appreciate that. And I think we have the link here somewhere. Yeah, there we go. simplertrading.com/key. I like that, key. All right, next question. Can we take a look at Tesla? Hey there, Marla, of course. And the question is, I bought puts on Friday. Okay, and would like to know my thoughts on a target. Okay. So we have an overall downtrend. So I like that you're focusing on the path of least resistance, Marla. Like that very much. And it's not just the fact that we bought puts, and it's not just the fact that we're looking for movement lower. At what point do we see, forget feel. At what point do we see we have an edge on the chart? Whatever that process was for you. So I'm going to sort of take that same thought. Where do I see I have an edge on the chart? And then look at it from the perspective of a target. Marla, if I'm long a market, or in the case of your Tesla question, if I'm short a market, I never, ever want my first target to require the market to do something it wasn't already willing to do. In other words, I cannot put a first target at a new low when I'm short, and I cannot put a first target at a new high when I'm long. So that also means I will never short in the hole, because what shorting in the hole means is that someone else has got to be even more bearish than I was and push the market to places it hasn't recently gone. That's a very vulnerable spot on the chart. So not knowing where you entered from, but I love directionally where you're at, I would say, where have we been most recently? Whether that be from a volatility perspective, how many points does Tesla move typical on a Monday? That's data that I use. How much volume is sitting near, say, 202.20, or let's see. Oh, I should take that back. 203.20, 203. How much volume is sitting there? What were the recent lows? I would probably keep an eye and say 204 and change as a level where we're capable of getting there, but that at that point I could make some decisions about risk management. So that's what I'll always do. And if I'm focused on shorting or buying puts into rallies, the market's rallied enough to give me some room for profit on the way down without having to do something new. So I hope that makes sense, Marla. Thanks for the question. All right, next up is, hey there, Christian, how are you? Bear market ended with the pseudo Fed pivot. Christian, I will tell you, I don't use vernacular like a bear market or a bull market, because those are based on arbitrary assignment that we've all agreed on of a percentage. So the markets are down X% from the high, bear market. I think it's more important if we look at a trend, right? But I hear you. I think most of the market participants out there, traders and investors, will use that verbiage, and therefore it's psychologically relevant and impactful. Being below the 200 is bearish. Doesn't matter if we're in a bear market or not. Being below the 200, simple or exponential, I prefer the exponential, is absolutely bearish. As far as the pivot, I think a lot of folks are crediting Daly's comments. I don't know if that's perhaps what you're referring to, Daly's comments. It's got to come from the horse's mouth, right? I wouldn't even give Williams, and Williams is obviously a very respected or well-watched. He was number 2 in the Fed for a very long time. I wouldn't even give Williams that kind of weight in his words. It's Powell, maybe Yellen, but it's Powell or nothing. It's got to be Powell. What happens when the other members sort of sound like they're ready to pivot? It's sort of like the drum roll. We're still waiting for something. It's a ramp up. It's preparing the market for something they're expecting, which actually makes it a little bit more hazardous, meaning we're putting, what's the saying? We're putting the cart before the horse. All the other members of the cart, the horse, in this analogy is Powell, is Jerome Powell. I don't think it's over yet. No, I do not think it's over yet. All right. So thank you for the question. And you know what I'll do to determine if it's over or not? The idea here is, kind of, Christian, going back to what I was talking about before, and I think a lot of you will see that the tie-in tomorrow, would I presume that the bear market ended without volume, right? Would I consider how this cycle is behaving, how I would navigate the shift, if it indeed is true, without volume? In other words, I can't be alone in that opinion. Does that make sense? So if I'm missing that component, I could be wrong. I could be just out there by myself, and that's no good, right? I'm going to ask myself, are we seeing that shift in terms of that participation and that attention? So thanks for the question, and great question. I think I got something similar like that yesterday during our weekly report. So I love that, and it just, again, it kind of shows us, hey, even the volume in terms of attention is starting to shift to, hey, maybe we aren't getting ready for some catastrophic move to the downside. But I don't think we're out of the woods yet, because, the wrong trade now would be to presume that, right? And then we'll talk a lot more about the right trade tomorrow, the kinds of trades that I wait on. And they take some time to develop if we're going to see that significant a shift. Monetary policy is a big shift. Yeah. All right. Hey there, Mr. Walker. YM and DIA. help you interpret the price movement. You know, Mr. Walker, I will only look at the Dow. Take a look here. I will only look at the Dow when I am so take a look at where we are right now. If I were to anchor some volume and ask myself, are we at an important decision level? There's a couple different ways I could look at volume to navigate what we're seeing right now. We're still below the 200. We're still below significant volume levels, but we're at an interesting zone right now on the YM. Why is the YM more important? Why do I want to look at the futures and not the DIA? Remember that if I'm looking at the DIA, I'm looking at that very truncated 9:30 to 4 o'clock world. Is that the world we live in? No, we know that opinion about the markets and concern about geopolitics, monetary policy, and central bank conversations are happening darn near 24 hours a day. I want to pull up a time frame and a symbol that reflects that sort of 24-hour a day psychology. You know, I'm just realizing I have no idea what time it is. Let's see. Oh, okay, we're good on time. Okay, so what I want to remember is if we are looking at the Dow, I could trade the DIA. I could buy the shares. I could buy puts or calls in the DIA, but it's the YM that's going to set the trade up. That's a really important distinction for traders who are trading gold, crude, bonds, notes, indices, currencies. We have to make sure we're looking at the broader touchstone market because, by the way, that's where the more complete look at price and volume is going to be. So the way you want to interpret price movement, you don't have to interpret anything. That's the great news. Just look at the YM and then ask yourself, do I want to express this idea, this trade in the micro, the mini, the options, or the ETF? And that's going to be the most streamlined and accurate way to do it. Funny how streamline and accuracy tend to be running parallel paths. All right, next up, what are my views on the XLE? Relative outperformer, right, Larry? Yeah, good eye. So when we look at XLE, unlike a lot of other sectors that are either neutral to bearish or bearish, straight up bearish, XLE is neutral. And it's interesting because what's been the chatter about crude has been very, very bearish. I will not typically trade stocks that hinge upon what the value is in the related commodity until I've got a grip on the commodity. So speaking of getting a grip on the commodity, what happened in October, early October? We went from a downtrend to a neutral trend in the crude oil futures market. We're still sort of shaky. We're still below the 200, but we're starting to see that neutral market sentiment is working in. And you know what's really interesting? Volume is also now starting to stair step. So if you were to look at volume the way you would look at the trend, there's a trend in volume as well. And we're starting to see that that's heading higher, which gives me a whole lot more confidence about what we're seeing in the XLE. Now, we might be better off in an individual stock. So Larry, this is something that I've talked about with my sector secrets folks. XLE is neutral, but it's looking better. Look at Exxon. That's your number one stock in the XLE. This is where the boat might be better than the tide, right? This is where the boat might be a better. So when traders say, well, Rag, this idea worked, but another symbol did better. Oftentimes what you're going to find is that symbol had better participation and better market trend clarity, and it was a relative outperformer. And I think that's the situation, Larry, with Exxon here. So thank you for the question. All right, gang. As always, thank you so much for being here for Charts and Coffee. And I will see you all if you haven't already registered. I'll see you all tomorrow at 8 o'clock. If you've been to any of my webinars before, bring pen and paper. We make them very workshop-like. I'm going to show you what I've been doing and how this is something that's continued to work for, at this point, many, many, many years, and will continue to work for many, many more, because I'm not grabbing something unique simply about 2022. We're grabbing something that's psychologically relevant in terms of human behavior to help us navigate this market, right? It may not be the same thing we saw in summer or in 2020 or in 2019 or in 2008, but elements of it are. And once you see that pattern, whether that be end of day or intraday or heck, even on the weekly, it just starts to glare at you and you realize, oh, I haven't been looking at participation in the most accurate way that I could. So we'll talk a lot about that tomorrow. I'm very, very excited about it. All right, gang. As always, have a great morning. Heads up for Yellen at 11. Heads up for that PMI number at 9:45. Two big hot zones coming up later on this morning. All right, gang. Be good to each other.